Well, thanks again for joining us. I'm Marlin Bohling, your tour guide to the ag commodities, and I have a very special guest in studio. As Tim mentioned, we have Mr. Chris Swift with us right now. He is with Swift Trading, and he is based not too far away in Nashville. Always good to visit with you.
Absolutely.
Thank you,
good morning.
Very much. Always look forward to our talks. Except as we talk about the markets here this morning, let's take a look at this corn market and see how it's drifting around to the downside. You know, we had quite a bit of pressure overnight. Right now, your July contract is down 5.5 cents at 7.79 1/4. You have December down 9 1/4. They're kind of gaining on that nearby contract versus the deferred contracts here this morning. Does that mean much to you or not?
Well, it's kind of like the old crop, new crop spread. So we have seen Tim give us a really good outlook for the next couple of weeks of warming and drying area, and that's what the Corn Belt needs right now. So I think that's what we're seeing is that immediate demand still needed, but yet it looks like we're going to get some of that crop in the ground.
So we had, you know, the weekly export sales last week. They were still very strong on the corn and actually over 1 million tons on the beans, too, last week, even though you don't really hear about it too much in the overnight trade.
Right.
Somehow that's all getting in there. It must be in smaller quantities somehow. But isn't it amazing how much demand? Well, there it is, corn 1.52 last week. So what do you think about that? How are they doing that?
Well, I'm not real sure because it's so, when we look at the dollar index and see how high it is, and we know that it's very difficult to exchange our currency rate, and then as well as having a high price for the corn and beans, it just shows the demand and the need or the short supply of what we have on hand right now.
We did have that one day of a big sale, I guess, here about a week and a half ago or so. But how do you feel about the corn planting progress? How are we situated right now?
Well, right now we'll be just a little bit behind, but if we get this weather up, they will be able to catch up really, really quick. So I don't have much fear that, you know, when we look at the kind of the topping action in the charts right now, and we see that we haven't been able to make new highs here recently. So the combination between those, beans being a little bit soft, it just kind of lets you know it's a different time of the year now.
Given the equipment that we have here the last few years, and you have some of these planters that'll go like 9 or 10 miles an hour. And,
yes.
You know, they're like
24/7.
About a half mile wide. You know, I mean, my gosh, they can cover a lot of ground.
It sure can.
I just have a hunch that given the open weather we're going to have, we may be amazed at how much they actually put in this.
Oh, I don't doubt that at all. Never bet against the tenacity of the farmer.
Not that that is really necessarily such a bearish thing, but it's just it's a testament to the ingenuity, I guess.
The ability, just the sheer ability.
Of the farmers that they can do that. Let's take a look at soybean prices here this morning and see how they're holding up. Now, with the corn being kind of weak in the knees, on the soybeans, you have July down 16 3/4 at 16.05 1/4. November is down 17.5 cents right now. Different story on the wheat market here early on. Let's take a look here at Chicago wheat. And in Chicago, July, we have turned 1.5 pennies lower at 11.07. Now, we were fairly sharply higher in the overnight trade. In Kansas City, you have July 4 3/4 higher at 11.75 1/4. But Chris, that's almost on the low of the day. And you look at the Minneapolis market here on the spring wheat trade. You have July now 10.5 higher. We're at 12.19 1/4, but look at where we had been. We're about 15 cents off our overnight high. Not necessarily a real strong performance in the wheat market right now. Do you think it's just being drugged down by the others or not?
It's possible, but these are new contract highs today in all those wheats. So even if they are lower on the day right now, in the overnight session, I think all three of the different varieties made a new contract high.
So what if we make a new contract high in Chicago wheat and close lower? Yeah?
I don't know. It's too early to tell right now.
All right. We'll pause here. We'll come back and we'll take a look at the livestock trade and see what it's doing when we come back after this. Well, last time I checked, the Dow was down 300 or 400 points. Let's see what the cattle market is doing here so far. Let's go to live cattle futures. Chris, we have June down $1.27, and we have the August down $1.75. The biggest loss would be in October, out in the fall months, down $1.82. So what do you go by for the most determination here on the market direction. Do you watch the June or August or further out or what?
Still watching all of them, but still June and August right now because those are the cattle we'll be selling the most, the quickest here. But what we saw this week is the boxed beef market had finally traded back under 255. 255 had been a ceiling for years, and then it broke above it in the 20 time frame. Just now starting to come back down, and the rib's been a little bit soft. And so I believe what we're seeing is a little bit of consumer speaking here that says we're just not quite going to be bidding as higher for beef in the grocery store as what we did before.
Well, let's take a look at this. Now, on the feeder cattle side, I thought maybe they would be a little stronger today with the weakness in the corn, but they're not. You have August feeders going down 237, Chris. We're at 172.32. Now, what is happening here?
Well, it's very unprofitable to feed cattle right now. If you are just making your proceeds off the sale of the fat cattle, it's very difficult to sell that fat cattle for a price that returns the input costs that you have. So eventually what we're seeing right now, in my opinion, it's just a battle between those inside of vertical integration and those outside of vertical integration. Both of them still want cattle. They've kept that price up relatively high. Now maybe we start to see more convergence of bases. The index, the real world cattle are still trading around 155. The futures carrying $15 to $20 premiums to them. We may see this summer just nothing more than a very dull convergence of bases.
So that premium, is that due to the drought in part or not?
I think it's due to the drought. We've slaughtered a lot of cows, and there is fewer cattle out there. We've had a decline in the total herd size, but now there is a thought that we will be able to rebuild at some point in time. And every single week that goes by that the drought is not broken, it makes it more difficult, and not so much that you won't be able to heal the pastures, but you won't be able to grow a hay crop on them for this winter. So it's going to be difficult to really expand this year, and I think there was a lot of hopes of expansion this year that just may not be able to take place.
And let's take a look at the lean hog trade right now. Chris and I were just talking about all the shutdowns in China, and boy, you can tell it's really having a big impact here on the hogs. June down 262 now at 101.47, and July down 280. It's at 104.25. Look at where it had the high at 106.02, and it has really come off of that already so far here this morning. So technically, it could be in some danger today, depending on where they finish up the session. Chris, always good to have you come in. Thank you.
Absolutely. Thank you, Marlin.
Yeah,
appreciate it.
Look forward to next time, too. Chris Swift, Swift Trading in Nashville. Janet, back to you.